So when I'm on the call with an investor and I'm raising capital, laying out those negatives is often a very, very good way to build trust. Welcome to the Nick Huber Show. Today I'm going to talk to you about how I sell investors, LPs, on investing in my deal. And you might think I open up, roll out the red carpet and talk about all the good things and all the great things about storage and how our business is the best business in the world and how our returns are spectacular and how our operations are amazing and how we cut costs and drive revenue and on the cash on cash yields and the IRRs and the big tailwinds in the industry. But I don't. That is not the way I talk about raising money for my deals, and it's not the way I recommend you talk about raising money for your deals. The better approach for me, and again, this is all just my experience. I've had, I'd say probably 300 calls, mostly on Zoom, with LPs over the past 6 years since raising money for our first deal. We raised $500,000 from friends and family. Basically, I went from dinner table to dinner table back in 2015, 2016 for our first development in Ithaca, New York, which I'm sure I will share the story of on this podcast with you. But my approach evolved over the years to one of gaining trust in a unique way. And I found the best way to do that was to talk about the downsides. Somebody may have reached out to invest with me, or I may have struck up a conversation with them, and they may already have reasons in their head why they like storage. They've read about storage investing. They've heard about self-storage facilities. They've seen them all over town. They want some diversification. And I mean, every asset class is different. You may be pitching multifamily, medical office, industrial, whatever it may be for you. But the investor is sitting down with you because they already have an idea of why they might want to invest with you. So my approach has been immediately, right off the bat, to lay out the negatives, to talk about the downsides, to manage the expectations. So I will often open a meeting and I'll say, hey, look, storage is a great business. We're having some success. I'll show you our track records, but I'll tell you right off the bat what we need to be aware of. These are the things that we are scared of. I'm scared of property tax risk because the towns that I'm buying storage in up in the Northeast and some areas of the Midwest, they're not growing. We don't have a growing tax base. We actually have a shrinking tax base, and the budget keeps growing for school boards and maintenance. And in our counties with snow and salty roads, the infrastructure is crumbling. Property tax risk is real because in 1920, these were booming metropolises. Towns like Elmira, New York and Ithaca, New York were growing. But today, they're not. From 1950 to 1990, basically these towns got cut in half. Half the people left. So they're leaning hard on the businesses that are left. Property taxes is a big fear of ours. The second one goes hand in hand with the first is the lack of population growth. Now we can talk about some of the positives, but the negatives are clear. Main, big REIT investors, a lot of LPs. I get on a lot of LP calls just like this one with you and many of the people here that I invest in upstate New York, Pennsylvania, and these shrinking towns, small towns, rural areas, and they just have absolutely no interest. The call ends and they have no interest of investing with me because they know that, hey, look, investor appetite is low. What does that mean for us? I mean, we are buying on cash flow, but we're kind of punting on appreciation. We are in this for the long haul. We're looking to hold on to these assets for 5, 10, 15 years because, we can control a lot of levers in a deal, but we can't control what somebody else will pay for our property. Right now, investor appetite in the Northeast is minimal. And again, taking a step outside the pitch now, it's not always minimal. People love storage. People love cash flow. It takes care of itself. But let me continue. So that's what we're up against. We're up with declining population and property tax risk. Does this sound okay to you? Look, let's also talk about the bad scenario of interest rates. We're looking at, a potential exit in our model at 5 or 7 years. We're not obviously planning that, but let's go through a worst case scenario. Let's talk about interest rates going from, we're getting really good, no prepayment penalties, 3-year term interest, sub 4%, 4.25%. What if that changes? What if, interest rates are at historic lows? Let's put ourselves in a scenario. And again, I'm talking to the LP. I'm not talking about to you listening to my call, listening to this podcast or watching this video. Let's think about what could happen in a worst case scenario. We're buying cash flow, so we're confident that we can hold on to these assets, but we may go through some tough, dark times if interest rates go up. If interest rates go to 7%, we're confident we can hold on to our building and we can weather it. But guess what? You and I, we're going to be stuck together. We are going to be stuck together. Our 5-year, 7-year time horizon may turn into a 10-year time horizon. We may get suboptimal returns for years if we're stuck weathering a really tough interest rate, making those debt service payments. How does this make you feel? In that worst case scenario where 3 years from now, the economy tanks, interest rates go up, inflation is massive, and we don't have a refi event. We don't have a sale event. How would that make you feel? And that's generally where I leave off the call. And investors appreciate this. I'll tell you that investors will trust me for giving them the straight up truth about the risk factors of real estate. Hey, it's illiquid. Hey, we're going to have property tax risk. Hey, we're buying in property in areas that are not necessarily growing. So when I'm on the call with an investor and I'm raising capital, laying out those negatives is often a very, very good way to build trust. People will look at me and they'll say, oh, well, Nick, now that you mention it, and then something amazing happens. Then they start to talk to me about the things they like about the deal, the things they like about storage, the reason why they might be a long-term investor. I mean, sometimes I scare the hell out of them and they get out of my call. That's great. I don't want every investor. I don't want the investors that are after a big, quick flip, a lot of cash right off the bat. So I'm kind of vetting the investor. I also ask them some pretty tough questions about themselves. I kind of flip the script. It's not me selling them on my deal. It's me asking them questions about why the deal might work for them, what they might like about it. Why? Why do you like this deal? Tell me about your investment style. Tell me what you're looking for. I'm kind of qualifying them. And what ends up happening sometimes when the calls go really well is that we bond, is that we form a connection. They build trust with me. They know that I'm a straight shooter. They know I'm giving it to them how it is. And they start to sell themselves on the deal. So that's it. That's the lesson that you can take away from this podcast episode, that it's not all about pushy sales approach. And I get it. I have an advantage. I have LPs coming in left and right from Twitter, all over the place, who are interested in storage. I'm also in a really sexy asset class that everybody loves. It might be harder. You might really need an investor. But I'll tell you what, if you walk into a sales situation and promise the moon, talk about your big investments or your big returns, what all can go right, why your deal's amazing. I mean, you should touch on those things. You should talk about what you like in a deal. I'm not telling you to be all negative throughout an entire call, but if you talk about the negatives and the downsides, it will cause a person to take you seriously and trust you and think hard and often sell themselves on the things they like about your deal. Hey guys, I have big news. I recently revamped my sales and customer service team at my self-storage company using folks in South Africa. Listen to this English accent.
Hi there, my name is Anton and I'm a sales professional from Gqeberha or Port Elizabeth, which is in the eastern province of South Africa. I've been in sales for about 8 years now with experience in hardware sales with some of the leading brands in the world, such as Canon, Panasonic, and more recently Red Bull.
Okay, now the surprising part. The person you just listened to is available for hire right now, and they're asking $9 an hour. If you want an introduction, if you want to hire this person into your business or at least interview them, send me an email, nick@sweatystartup.com, and I can make an introduction and offer you $1,000 off the recruiting fee. nick@sweatystartup.com.